Hey guys, today's Saturday the 27th of Feb. Today I just wanted to kind of touch base on a few things. Firstly, just a couple of currency pairs that have a potential trade setting up. Very simple setup that's forming. And I want to show you that because that pretty much, you can pretty much apply that particular technique in any market. And it has a really high probability of being successful. So I'll do that firstly, and then I'll kind of talk about the stock market and what I'm seeing, and what's going to be happening, potentially happening in the next few weeks, or as soon as this week. Sorry, we're heading into a very, very interesting phase, and I keep saying that every week, but it keeps getting more interesting as we go. And I don't want to sound doom and gloom, but it's just the reality of it, right? I just want to point it out. If I just say, I just want to give you the right information. I don't want to mislead you, but we're not in a good shape. Okay, put it that way. So let's talk about what's happening next week, or the week coming up in terms of the economic calendar. All right, so big week for Aussie. It's already been a month, since we had our last RBA meeting, and we've got one this week already. So time's really moving really fast, and that's the issue at the moment, time. So next week we've got, as of Monday, we've got a lot of Australian data. I think there's China data in there too, and pound data, which is also important because we know the pound's been really weak. And then obviously I think Tuesday is the RBA meeting. Now this one's going to be interesting because we've seen a lot of weakness. Signs in the property market and all that kind of stuff. Jobs market, Dick Smith closing down. So it's going to be interesting to see what the RBA are thinking. Are they thinking about cutting rates again? We've been pretty good compared to all the other countries. We've still got room to cut, but it's going to be interesting to see what they do, right? So if they cut, that's going to obviously it's going to put some pressure on the Aussie dollar. So we'll see how that goes. There is a lot of US data as well. I won't go through every single one, but next week is going to be important for Australia, New Zealand as well. So there will be a lot of movement on the Aussie currency pairs. Okay. Now, so like I said, I just want to kind of just run you through these two setups that I've been watching. Firstly is USD yen. Okay. Very simple setup. So you can see here the market's been trending up, right? It's been very bullish since 2011, right? If you happen to be on this pair, then you would have been making a killing from this one. So what I want to do is on the weekly at the moment, I was doing down to daily, okay? Daily time frame. So since topping out up there, we've kind of, the yen's been losing value against the US. And we've kind of come down here to this point here. We've put in a double bottom, right? It's a standard pattern, a test of structure. So we put in this double bottom, and then we've bounced off that, reversed and bounced off that, and now we're looking for price to probably heading to these levels here. So the question is going to be, so how do you take the trade, right? So the trade simply is you're looking to trade in the direction of the trend, okay? So the direction of trend, obviously, from looking at this, is bearish, right? So we've got lower highs and lower lows, and we're looking to trade in the direction of the trend. You can look for counter trend moves, but I don't recommend it unless you kind of know a bit more experience, I guess. But for this one, you're looking to hop on board the trend for continued move down further, okay? Now, I think there might be some strength in the US soon. But for this example, I'll kind of show you what I mean, right? So, if you're looking if you're looking to get involved in the direction of the trend, then what you can usually do is you can look for price action as it retraces to test some level of structure. And as you can see here, you've got two occasions where price has kind of come down, bounced off some level for whatever reason, and then come back. And if you look down here further on, you can see that it's kind of come down to test that same level and bounced off as well. Obviously failed, and then continued down, broke through support and went all the way down there. So you're looking for a continuation pattern pretty much. So one way you can play this is wait for price to come back up to around these levels, and then look to short the market, so that short the market down. There's a high probability that can happen. Most of the time that does happen. There are times that it does, break right through that, but that's you're talking about 20% of the time versus 80. So 80% of the time you're taking this trade every single time. Then 80%, 70%, 80% of the time you're pretty much on the you're taking the right trade. So this one's a very very simple trade. Just wait for price action to go back, test structure, and then reverse back down. So hopefully that kind of helps you there. If you want to pinpoint exactly the right levels going down to the 4 hour or the 1 hour time frame, you can do that. You can use Fibonacci retracements. You can use heaps of different techniques to pinpoint more accurate levels. And that leads me on to Pound Aussie. Because Pound Aussie is putting up a similar setup. Same thing here too. We've been very bullish for a while, and then we've topped out around here, and we've come back down. And in this case, the only difference here is we've only just recently come back down here. So we've put in the bottom for now. Looks like a bottom, and we're looking for price to potentially go back up to retest this level. Now, it could just keep going down from here. We don't know yet. So you don't actually enter the trade straight away. There's actually two trades in this, right? You can play this to the counter trend side or the trend continuation side. Trend continuation being similar to the USD yen, where we're looking for price to go back up, retest, and then enter the trade for a move down, right? The counter trend trade is, basically entering this level in the hope that it's going to go up to this level, retest that, and sell out there. So you've got two trading opportunities. But to get involved in this trade, to buy long and go up, you're looking for a confirmation, right? We don't have that confirmation yet to actually get into the trade. So you can look for something similar like the USD yen, where they had a double bottom, something like that. Or you can go down to the lower time frame, right? Just basically look for a reason to entry. Look for maybe a double top, maybe a bullish pin bar, something like that. Something to give you a reason to enter, right? At the moment, I don't have anything that gives me a reason to. But if it does, I'd be looking to take the trade, go long for a move up, and then hopefully make a decent size, maybe up to about 198 levels, and then close the trade, sell out, take profit, and then look for a reversal back down and take another trade. So there's a very simple opportunity there. I won't get into the details of every single trade, but I just wanted to kind of show you those opportunities that are there. Okay, so that's done with the currency. Oh yeah, I want to show you AUDUSD. Being this week we've got a lot of Aussie data. So not much has changed since last week. I've highlighted these levels here because these are, I consider to be important support levels where prices tested several times and bounced off. And then we finally broke through this level here, and you can see that this line I've got here, I've had that in there for quite some time, and we finally went up there to test that level, and then got rejected. Obviously, went back down. Usually, it does come back up to test it again, right? Which it did, but this time it actually broke through to create a new higher close. So that indicates to me that we're looking at potential trend continuation to the upside. Now, things can change very quickly this week, so we'll just see how that goes. If the RBA does look at cutting interest rates, then we're obviously going to see more weakness, which kind of already tells us here. We can already look at this level here, and we can already say that this looks pretty weak. This looks like it's going to break down. So I always look at the chart to tell me what they might plan to do, because it does give you forward warning as well. And you've got a shitload of resistance at this level too. So breaking past this level here is going to be difficult. Now, if I zoom to the 4 hour, and you've got if you're looking to get long for a quick scalp or quick day trade, you've got a bullish bat pattern, right? So you're looking at entries at around 79.08s for targets at around the 71.600s. So there's a trading opportunity there, but again, it's up to you if you're a trend continuation or counter trend trader. But there are several opportunities here as well. So yeah, but I think this week I'm betting on them cutting rates, and if they cut rates, it's going to be a weaker Aussie dollar. Now, the other thing you should notice too is that over the next between now and Tuesday, notice what the media does. If the media are all over this and talking about whether they're going to cut it or not, there's a lot of attention on it. That's when I find that the market will start whipsawing, right? When I say that, I mean it will start to push the market up and down quite as you head into the announcement. Mainly because there's so much speculation that the institutions use that to their advantage to scare people out and create panic. So if there's not much attention heading into Tuesday, then generally it will safely move in one direction or the other, right? So I'll maybe post a video if I can on the day if I can. So yeah. All right. So that's the now I want to look at the stock market, which has been quite interesting. So I'll start looking at SPX first. I won't talk about oil because it's the same thing every week anyway. So we'll just talk about stock market and gold. Okay. So this is the S&P 500 US major stock index, and without going into too much detail, I've put in a number, right, as being 1,980 as being a likely area that we're going to see a reversal back down. Okay, and this is not a correction; this is an actual reversal, right, going past these lows. Now, it's not going to all happen in a day, right? It could be over a few days it could happen. But don't expect this all to happen in one day. Just want to be clear on that. There's another level I've marked in, which is the 1993. All right, so that's another likely level that we could see a reversal as well. There is another level above that, which I don't think we will see, but I've marked it in there just so I'm aware of it. It's the 2022 to 2033 level. Now, I doubt that's going to be able to get to that level, but we'll wait and see what happens. But yesterday's trading was kind of disappointing, right? Considering we had the previous 2 days, being Wednesday and Thursday, we had these nice big moves, right? So very bullish candles, right? I expected to see a retrace, but the price action within that day was quite boring. Okay, so if I go to the 1 hour, you can see what I'm talking about, right? So this is going from the daily to the 1 hour. So I'm looking at these candles here. Okay, so we opened high, I think, and then from then on we just sold off all day. All right, but the price action was it wasn't normal, right? It wasn't a normal market. It wasn't normal market behavior, which is got me thinking a little bit. So the question is what's going to happen next, right? So this is all going to be dependent on time, right? So time is more important than price right now, right? It doesn't really matter if we have to go up or down, whatever the case may be. There's a kind of a time that we need to reach certain levels by. If we don't reach it by then the market will react, and you've got to kind of. This is why knowing what's going on in the world is important, because you've got to combine the whole geopolitical situation, the financial situation, the economic situation, all that stuff, and you've got to kind of marry this up and work out, well, what could they do? What could happen, right? Like, for instance, if war broke out tomorrow in Syria, you'd be pretty sure that oil prices will jump, right? So things like that. But what I'm thinking is at any of these levels, we could see the market start to make new lows, all right? Start to make the move. And I think this is going to be a pretty big move too. When I say big move, I don't mean it's going to move all at once down to whatever level it should go to. I think it's just going to be a lot of volatility, a lot of sharp moves down, and a lot of whipsawing, a lot of sharp moves down, and then a lot of sharp moves up, right? And the sharp moves up is really just not. I wouldn't even call it relief rally. That's institutions trying to whip out, scare traders out, right? Because there'll be a lot of traders that'll be looking to short the market. right? They know this. So what they'll do is they'll play on people's psychology, start whipping it up and down a bit, scare people out, and then before you know it, you're probably taking 3 trades, they're all losers. So that's what they do. It's really tough. It's not easy to deal with them, but you're just gonna kind of just either just take it or enter the trade and forget about it. Just leave. Don't even look at it, right? And then come back later. But I think we're going to see some initial lows. I think we're going to initially at least test the 1830.31 area and the 1808 area. These are the first 2 levels that you will probably likely see price kind of get down to as a first point to tick off, level to tick off. But after that, we could see, maybe some pullback, some relief rally. But the ultimate level that I'd be looking at is probably around the 1740s, potentially, as being the next low that we're going to probably create. But yeah, it's very interesting times at the moment. These patterns all measure up to patterns that happened in 2008, 2009, even the .com bubble as well. So very similar patterns. Now, before I jump on that, now the IWM, which I've talked to you about in the past, was stronger, right? So the Russell Index 2000 was actually stronger than the S&P, which was interesting. So that probably indicates to me that we might see a positive move early next week, right? Because the IWM tends to lead the market, right? On that note, also, one important thing I'll mention is that that what the market is going to try and do is it will, for it to make a big move down, it needs enough buyers on one side of the trade, right, in order to be able to sell, right? You need buyers to sell. You need buyers, and vice versa. So what I think is going to happen is you're probably going to see a lot of positive sentiment, right? The stock market's going to move up. They're going to talk about everything being a lot better. We're recovering. There's no recession. People are going to get excited and start buying into that. Now that's the trap, right? That's the trap. That's what they want you to do, because once they do that, right? Once they've got enough buyers, that's when they'll make the real move. Okay. So don't be so quick to jump into the stock market, because I think it's going to be the move that traps all the buyers. Okay. Now the Aussie ASX200, right? ASX200 again. I've marked in these levels of support resistance. The blue lines here is potential resistance that is coming up. All right. So what I see happening here in the Aussie, right, the ASX 200, is we're definitely going to have a bull market week, all right? So if I open this as a new chart, so I don't have to delete all the other stuff there. If I open up as it is, what you will see now is, we've had this down move, as you can tell. And then we put in the new lower low, I think, and then what happens is prices rallied back up, and then we've pulled back down, right? So we've done a retracement, a standard market move, a retracement. The next move I assume will happen, I'm confident will happen, is another big move to the upside. Now, if you look at the candles, right, if you can read candlesticks, it's going to help you a lot, because the candlesticks tell you a story, right? In this case, where you can see here that you've got these big wicks, right? And this is what this is telling you is, at some stage there was a lot of sellers that sold the market down, right? But as it went down, at some point around this level here, all the buyers start to come back in and push the stock back up, or the index back up. And then at the close of this candle, the next candle, the same thing happened. The sellers came back in, tried to push it down, failed to push it down below this low, right? So it's creating a new higher low. Buyers came back in, pushed it back up. So same thing with the next candle. Same thing with these candles here too. So that tells me there's a lot of strength, right? There's a buyers that are interested in this level. So the likelihood of it going up on Monday is good, right? So and also if you draw, sorry, go back to this one again. And you know, all these levels here aren't random, right? I've used specific numbers to put those levels, and those numbers are mainly Fibonacci ratio numbers, right? I've just taken it out because I didn't want to have too much stuff on the chart. But if you can also do an ABCD pattern, just to there ABCD, and you get a completion around here too. So there's a lot of numbers, signs pointing to this level here as being, you know, at least somewhat resistance. We've got a bat pattern with a completion up at the 52775 level. Again, I don't think we'll get there, but you never know, right? If it does go up there, you've got a selling signal there, right? So the dark blue ones are the ones I've highlighted to say these are much more critical. These ones have a lot more confluence. So I think I was getting Fibonacci retracements on the weekly and daily at those levels. So those levels, that tells me that this is, we're going to hit a lot of resistance if we even do get there. But again, I think the Aussie market's going to go down. All right, it's destined to go down. And again, which levels do we go to? Well, initially we have to touch the lows. Right, that's the first level we have to test. Following that, I'd be looking at, these levels here, right? So you're talking about 300 level. In the long term of the next year, 2 years, I think it's going to go much, much lower, all right? So, but we can talk about that another time, okay? So covered that. I'm going to talk quickly about gold now. I'm just time conscious, but I'm not going through every bit in detail. Just ask me any questions if you have any. I know people usually tend to just follow up with a couple of questions, which is good. The big one that I'm very interested in is gold. Now you've been seeing all my charts, you've heard me talk about gold for the last almost 2 years. And this one, gold is ready to really go spastic, right? So we've broken structure at these levels here, right? The next key structure level is this 1300 level, which I'm dying to see this get broken. If this gets broken, we're going to be pretty much set for extremely high prices to come in the near future. Right now, what it's done is it's kind of had the rally, and now it's kind of consolidating sideways. And this is generally a bullish pattern, right? This is kind of like what you would call a wedge pattern or pennant pattern. And price is just consolidating in this level. It's just going up and down, channeling within this level. So yeah, you'll do that for as long as it chooses to, right? And once it's ready, right, once all the numbers line up, not just with gold, just with all the markets in general, that's when you will see some movement to the upside, right? So if I zoom into the 4 hour, I can already tell you what's actually happened, right? So, sorry, not with this chart. I was talking about a different chart, but this could go on forever. This could go on for quite a while. They could just keep going up and down like this. Just depends on what the plan is. But to put it bluntly, and I'm going to make this call, is that I reckon we'll definitely surpass historical highs, which is 1900. We'll definitely achieve that this year. I reckon we're going to get much higher into the year. And my short to midterm target, when I say midterm, probably I'm looking at between maybe 3 months to 12 months. I think we're going to hit 3,000, right? And then following on from that, I think, this has room to move. 5,000 is not even questionable anymore. 10,000, I think, is very, very likely. But there are people talking about 20,000, 30,000 gold. So a lot of opportunity there. And I recommend buying some physical, and then buying gold, as stocks or whatever the case may be. But yeah, guys, I'll leave. I don't have anything else to show you. I think that's it for now, and I think that's all you need to know for now. But this week's really, really important. Also for super as well, I've just recently just added. I've recently just updated all my super. So whatever funds they use to invest in whatever stocks or ETFs they do, I've taken control of that. So I've closed out all the trades or whatever it was that they had invested in, and I decided to do this on my own because you know I have a pretty good idea now. So so yes, I've got no problem with I won't show you that now. Actually, I'll show you that another time. Actually, there's not much time anyway. But yeah, important week this week. Let me know if there's any questions. But be on guard because I think we could see some sudden reversals, some whipsaws, maybe even a flash crash. You know, heading not this week, maybe next week or the week after. But very volatile and just be very careful out there. I think things aren't going. I think things are going to get much worse very quickly. So yeah, it's not a conspiracy, by the way. This is all real stuff that's happening. It's just more likely than not you're not actually paying attention. That's all it is. So yeah, so I'll leave it at that. Best of luck. Have a good week, and I'll talk to you soon. Take care. Bye.